I envision a scenario it could go to 130, if not 120. Again, this is not necessarily a 2025 sort of event, that 120 target, but down the road, because as you pointed out, things are lining up. And going back and talking about the Trump administration, I mean, I think they would be very okay with a stronger yen. I think this is part of the Trump administration would ultimately, although they would not say it in public, would like a weaker dollar to help their competitive advantage, because we're in an environment now, it's sort of relative competition among economies. But Japan wants a stronger yen because they're one of the few countries that has an inflation problem. That's a way of helping put a lid on inflation.
But we seem to be getting very mixed messages, though, don't we, out of the Trump administration? So you're saying that maybe in private, actually, they want a weaker US dollar. And in fact, they're getting a weaker US dollar. You know, the US dollar has definitely come off its highs in the past week or so. And yet we just had Scott Bessent again in the last session reiterating the strong dollar policy. So what do they want?
But okay, if you listen to the next sentence that he said, though, not necessarily on a bilateral arrangement, meaning that, hey, that they're going to kind of go in and if you are a currency manipulator, they're going to maybe take some actions right now. Every Treasury, I've been doing this for, I don't know, since the mid 80s, every Treasury secretary comes in and they say, hey, we have a strong dollar policy. They have to say that. But I think the big driver of U.S. dollar weakness isn't necessarily going to be what the administration does. It's going to come from what I think could be a shift in relative growth. I'm using 2017 as the roadmap, which we had a very broad-based global growth environment. We could get something like that. But the point here is I think the U.S. economy is going to lag the rest of the world. And if I'm right, that's a dollar bearish environment. And that's what we're sort of positioning for.
Jack, talk to me about speed here and back to yen. 150 to 140 or even 120 is a massive, massive move, right? We saw several months ago what happened with the unwind of the yen carry trade, right? I mean, both sides are going to have to be very, very careful about how this plays out.
Yeah, Martin, I agree. I don't think this move is what we all saw last summer, a pure unwinding, as you pointed out, the carry trade. I think there's some other factors being put into place here. I mean, if you remember last summer, the idea the U.S. economy was weakening, the labor market was weakening. We don't see that in this environment. I think it's more kind of structural in nature, meaning that it's part of, Japan having an inflation problem, the Bank of Japan needing to hike rates. The rest, other central banks in the developed world are still more biased towards cutting rates. So that rate differential moves in favor of the yen. And then I'd also just add, if we get a little bit of a correction in equities, maybe that yen, which historically is kind of a risk-off currency, could add a little bit of buying interest into the yen. So it could actually happen a little bit faster, again, if risk assets continue to or really start to come under some selling pressure.